business. Now, for a first on CNBC interview is Southwest President and CEO Bob Jordan with our own Phil LeBeau. Phil?
John, thank you very much.
Phil,
Bob, we'll talk about Elliott here in a bit, but I want to first ask you about the presentation today. We're not going to go into all the details, but one of the things that stands out is you're forecasting double-digit profit margins by 2027. You're basically break even today. How do you convince investors you can actually deliver?
Well, I'm glad we're not going into all the detail because it was 2 hours, and we're standing in front of the centerpiece here, an aircraft equipped with extra legroom section, assigned seats. It looks beautiful. That's half of the revenue that we're talking about adding by 2027. You layer on top of that improvement of the base business. That's a big piece as well. And you saw a big re-guide this morning of our third quarter revenues up by nearly 3 points, which is very positive. Shows you that the actions are working. Then on top of that, we have a lot of ability to monetize our fleet. So we have a lot of aircraft that are coming from Boeing in our order book. We don't really need them all with the lower growth rate that we are planning now, about 1% to 2% a year. But all of those aircraft have value, and the used aircraft and the aircraft market is very strong right now with the issues with Boeing and the geared turbofan. So we plan to monetize every delivery, whether that would be sale-leasebacks or selling into the market. But all those things together add up to the numbers in 2027 that you saw. You
laid out a detailed plan, and yet you heard the introduction from John. Elliott management came out within a couple of hours of the end of your presentation and said, so what? Bob Jordan should be fired, and they're not listening to us in terms of making real changes real fast. Have you had any meaningful discussions with the people at Elliott? Because they say they've reached out to you. You guys say there haven't been meaningful talks.
Well, first, today was not about Elliott. Today's about all of our shareholders and driving value. But no, there's really been no meaningful conversation with Elliott at all. We've asked to engage. We've offered to engage. We've offered to interview their slate of board members, and they've really said no at every turn. And in fact, this plan that you see has been ongoing for well over a year, and every piece of the plan is underway. You've got an aircraft that is fully equipped for assigned seating and extra legroom. So everything is under construction. So for Elliott to come out and say the plan is rushed and it's hasty, to me it's just inane because this plan has been being driven by our leadership team for well over a year now.
If they call for a shareholder meeting and they want to have some of their people join the Southwest board, the question for investors is going to be, do I believe Bob Jordan or do I think that Elliott's right, that these guys are too slow to react? Look, the last 2 years under your leadership have not been good for Southwest. How do you convince investors, trust us, we have the right plan?
Well, there is no doubt. We have not lived up to the financial goals that I want or our shareholders want, that's for sure. And making no excuses, it's been a very tough couple of years. Coming out of the pandemic, strike, of staffing issues, and now you've got a lot of ongoing delivery issues with Boeing. That's really the number one thing affecting our plan. And, of course, we've had self-inflicted revenue management system issues that are now being fixed, which you saw in our guide this morning. But you've got to ask yourself, what about the team? What about Bob? The team that we've got here at Southwest Airlines has nearly 200 years of airline experience. It's the team that implemented the new Rapid Rewards system, that bought AirTran, that integrated AirTran, that put up the new Consumer Direct website, that did our current boarding that our customers love, that put together our ancillary products today like early bird boarding. So to look at that team and say they cannot execute, to me, does not make sense. But we've got to prove it, and this is a big piece today to show you this aircraft in action, and we're ready to drive forward and produce for our shareholders.
Bob, John's got a question for you. John, go ahead.
Go ahead, John.
Hi, Bob. Yeah, thanks. Tell me how you've calculated the loyalty danger to these changes. With these premium changes you expect will drive revenue, how do you avoid turning off loyal customers who will say you've changed your egalitarian DNA?
Yeah, John, I think there's two parts to that. Number one, on the assigned seating and extra legroom, we did intensive studies with tens of thousands of current customers and customers of other airlines, and it was totally conclusive. 80% of our customers want assigned seating, and 86% of other airline customers want assigned seating, so it's very clear. So it's what our customers want today. That has a lot, I think, to do with flying longer. The aircraft are fuller, but it's what our customers want. The other question was, what about bags fly free? And you've heard some talk about that. And we did the same extensive research, and it was also very clear, which is It's the number 3 reason somebody picks Southwest. After fare, then schedule, then bags fly free. And 97% of customers are aware of the policy. So there's tremendous consumer loyalty and awareness of this, and they love it. And the financial risk says that what you would gain by charging for bags versus what you will lose by those customers defecting to another airline, it just does not make sense. And I am proud of our bags fly free policy, and we stand alone. It's a moat for Southwest Airlines, and our customers love it.